Welcome to the Stock Health series. In this series, we are going to look at certain parameters and get to the final health score of the stock requested by you in the comments section. Today's stock is Larsen Toubro, which was requested by one of our amazing subscriber. It has a market cap around 5 lakh crores and stock price around 3,600. LNT has revenues from these 5 business models. Estimated growth rates for businesses are as follows. Estimated business growth is about 9%. So we have a business model score of 8 out of possible 10. In case of liquidity, let's look at these 3 parameters. Debt to equity is long-term plus short-term borrowing divided by equity, which in this case comes 1.32, which is better as it's less than 2. Interest coverage is earnings before interest and taxes divided by the interest portion. In the case of LNT, it is 8.07. It is good as it is above 1 here. Let's see current ratio. Current ratio is current asset divided by current liability. In this case, it is 1.21. So we have a liquidity score of 3 out of 5. For activity score, let's look at the cash conversion cycle, which explains a lot about cash and product management simultaneously. In cash cycle, cash goes out to the supplier, who provides raw material to the company. Raw materials are processed to the final product, which sits on the company's inventory. The product is then passed on to the customer on credit or on an instant cash basis, which is then received back to the company. Ideal time to complete this cycle is -30 to 180 days. You will get to know about this in a moment. Cash conversion cycle is days of sales plus days of inventory minus days of payables. Days of sales is time required by customers to pay. Days of inventory is time taken by products sitting on inventory. And days of payables is time taken by company to pay to its suppliers. Days of sales is receivables by revenue multiplied by 365. Days of inventory is inventory divided by cost of goods sold multiplied by 365. And days of payables is payables by purchases multiplied by 365. After calculating this for LNT, we get 77, 16, and 112 respectively. Ideal values are mentioned on right side. So the cash conversion cycle for LNT is -19 days. So we have an activity score of 7 out of 10. For profitability score, we will be looking at NPM, ROCE and ROE to see the efficiency of the company to generate profits out of current available capital and assets. Net profit margin is final profit divided by revenue. In case of LNT, it is 6.9% this year. Return on capital employed is calculated by profit before interest and taxes divided by total assets minus short-term liability. Here it is 15.15%. Return on equity is profit minus minority interest divided by equity. So, it is 15.39% in this case. Considering the last 5-year data for all of the above ratios, LNT gets a profitability score of 3 out of 5. In terms of governance, promoter holding and pledge percentage are very important. Here we have no problem as LNT is professionally managed and there are no shares pledged. So in case of governance, LNT gets 7 out of possible 10. In statistics, a metric called standard deviation is used to figure out how stable or consistent the values are. Lower values of standard deviation symbolizes most stability. In this case, we will be running standard deviation on last 5 years data of NPM and ROCE, which come out 0.98 and 2.04 respectively. So, LNT gets a 4 out of 5 in stability. In miscellaneous score, we will be looking for other pros and cons of the company. In LNT's case, they have maintained a healthy dividend payout ratio of around 30%. But on the other hand, their contingent liabilities, which are not considered in the current debt, are on the higher side, so they get a score of 6 out of 10. Revenue growth of LNT in terms of compound annual growth rate for the last 3, 5, and 7 years is 17, 12, and 11.5 respectively. The estimated growth for revenue for the next 5 years is around 9.5%, which is pretty decent. So the growth score comes 13 out of possible 15. Price to sales is a good ratio to find cheaper stocks quickly. Generally, cheaper stocks have PS lower than 5. It's calculated as market cap divided by revenue. In our case it is 1.97, which is quite good. Proper market value is calculated by justified earnings multiplied by adjusted PE. In L&T's case, justified earning is 18,570 crore, which is multiplied to the adjusted PE according to 9.5% growth, which is 30. So we get the proper value as 5,57,000 crores, which is closer to its actual value, which proves the stock is properly valued. By estimating future value using CAGR, NPM, and PE, we get a forecasted value of 8,17,250, which shows 61% returns in next 5 years. Hence we reach at a score of 20 out of possible 30 in valuation. So after evaluating all the points, the final score for L&T is 71 out of possible 100. You can pause the video for a summary. This video is only for educational purposes, not to be taken as investment advice. Do your due diligence before taking any investment decisions. Leave a comment about which stock would you love to see video on next.